market profile shows us how much time was spent at each price level, okay? It creates distributions, okay? We can study, here we have a distribution here at the bottom, okay? And you know, we know that people slice this up in terms of statistics and whatnot. You probably all saw this in college. But that middle area right there, 34 and 34, 68%, that's one standard deviation of a normal distribution, okay? And that's going to become something that's important to us. That's going to be a proxy how we define what we call value around a distribution, okay? That's going to become very important for us. How's a profile constructed? It's pretty simple. I hope this comes through for you. This is a 30-minute bar chart. You've all seen one of these, okay? We can label each of these letters, okay? Market profile terminology calls each one of these a TPO period. Not very important. We're not going to get bogged down in these little details. Time, price, opportunity, okay? We have A period, B period, C period. In this case, each of them representing a 30-minute period. Here's what that looks like as a profile chart. Let's go back to it, visually see it. We have it kind of drifting higher, a sell-off, a little higher with a head fake and J period higher, and then a sell-off there. Here it is, A period, B period, C period. Here's that J period spike high. It's the same thing, okay? 30-minute periods. To show you how this unfolds, well, let me say this. It does not repeat within the same period. So if we open right here, which is the open, by the way, at this little blue A, that's where the session opened in the morning, and we trade down to this low of day, and then it forms those little A's every tick or whatever you have your settings set to as it goes lower, okay? It doesn't stack more A's or anything as it trades back through those A's again, okay? And just to kind of hammer that home, here is a quick video of a profile developing throughout the day. This is played at 240 times normal speed, and this was just this morning. We're going to use this example again later. So you see, as we travel back and forth across 33, 32, 31, 32, again and again, it's not printing more A's, it's just, okay, during this half-hour period of the A period, this is the range that we've traveled. Boom, B period begins as a 30-minute period begins, okay? After 30 minutes, we'll start forming a C.
Now, can you do this on an hourly chart or for
anything you want?
Okay.
Yeah.
So 30 minutes is just like
this
the chart
is
they chose.
standard.
Okay.
Yes, very standard. Now, take a look at this. We have A, B, C, D. This is not typically how it's used. This is split out into each of those periods. Imagine the game of Tetris, okay? And instead of everything falling down, everything falls to the left. So notice how there's nothing else except for those couple C's up here. They're going to go all the way to the left with the A's, right? This M is not going to be able to fall very far because look, it's going to run into KJ, blah, 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 right? So here's how it looks usually. Boom. Everything just falls left and it becomes a distribution. We can see where we only traded 1 half-hour period. We can see where we traded 2 half-hour periods. It shows us time spent at price, okay? The blue dot shows us where we open for the full session, and the arrow on my charts, that little gray arrow, shows where we closed for the session, just FYI. There's different notations and different software will do different things, and actually I can tell my software to make a different kind of marker for the close or whatever I want, but for all my examples, this is what it'll look like. And notice how I've gone back and forth between using letters and then just blocks sometimes. Doesn't matter, just different ways to visualize it.